This weekend was the Berkshire Hathaway annual meeting, aka the meeting in which a bunch of hypesters go to Omaha pretending to be value investors when they really are not. Now, I wrote this on Twitter this weekend, and it got the most views I've ever had in a tweet. But what I said was this. Guys, first off, 25,000 people were in that arena, correct?
It looks like it.
I'm willing to bet there aren't even 25,000 true value investors in the U.S. currently. What it's become has become all these hypesters, the Tom Nash idiots of the world, the Meet Kevins, all these ones who sit there and say, when others are fearful, be greedy. When NVIDIA falls 3%, it doesn't mean you should be greedy. That's not fear. Fear is when everybody in the world hates the stock that you own, and it's been driven to such low prices it makes, and every single story in the world is negative about it. That's when you should be greedy. Not because stock fell 3%, you can buy the dip. Like all these crypto guys say, well, it was 70,000 and now it's 28. Fear is huge. I'm gonna go buy some. If you believe that, you are stupid, okay? I'm gonna tell you right now that very few people in that arena actually think and operate like Warren Buffett. And the ones that do are probably pretty well known. The Monish Pabrides, the Guy Spears, those kind of people. You know, it's funny. Somebody on Twitter this weekend said to me, oh, I see all these stocks you have and you lost money on them. And I wrote back and then I deleted it. Actually, I made money on 3 of them. I exited 1 at a gain. I'm waiting to buy back in. And 2 of them, I lost money on. Yeah, I'm fine with that. I'm fine with that. Pretty good batting record, but you shouldn't make your assessment of me based on that. What you should assess me on is when the stock goes down, do I reevaluate, decide if the story has changed, am I buying more? That's what a value investor does. Because you know what? If Occidental and Apple stock fell in half tomorrow, what would Warren Buffett do, Mo?
Go and buy a hell of a lot more.
He would buy a hell of a lot more. Mm-hmm. So we're here to discuss what happened at this Berkshire Hathaway meeting. If you're new to the channel, subscribe to us and share this with somebody who is really dumb, like somebody who's a crypto lover or something like that, who thinks that buying Peloton at $180 was a good idea, and then when it goes to 10, they think it's a terrible idea. Mo, what happened at the Berkshire Hathaway meeting?
So for leading into that, one of my favorite things that Munger said all weekend, and Buffett chimed in, was getting rid of toxic people in your life. And everything that you're talking about, all these people that say go and do these stupid things, those are the people that you should eliminate from your life.
Well, I wouldn't consider that toxic, though.
Well, it is a spiral effect because that's not the only place in their life that they talk about that, I'm sure.
So remember one thing, Mo. Go ahead.
I had a 20-year-old kid reach out to me on Instagram this weekend, and he was like, this one person in my life, I mean, he's 20, he just turned 20, and he's like, he always flakes on me, and he takes advantage of me, and this and that. I'm like,
bye.
See ya. You're 20. I understand it's hard to do, but as you get older, you will understand it.
You know, it's funny. I think back to quite a few people that reached out to me years later and said, bro, you just stopped talking to me. Yeah, I know. I thought I could save people. I would be like, oh, I'm going to make them. But at the end of the day, people don't want that. People just want to be negative or not. 100%. And I'm sure there's people in this world that think I'm toxic. I think it's hard to believe that, but I'm sure there are people out there who think I'm toxic. Look at some of the things I say on this channel. I just said in this video, you're an idiot, and that can be considered. But to me, I loved seeing that. I sent it to Daniel, Lisa, and all these friends saying, yeah, if you get rid of crappy and shitty people, your life becomes a lot better.
Yeah, I did that. And everyone knows my story. February 29th of 2020, when I got rid of my friends from high school.
Oh, that's right.
They were asking me to pay for their freaking wedding because I was successful. I have to pay for your wedding and they were like, pay for my dog training. I was like, are you kidding me?
I've never had that happen.
Yeah. Then I had the person call me for gambling debts. You've had that though.
Yeah, I've had that. I had that guy call me. I told you, I gave him $10,000, and you know what I looked at it as? I'm never gonna see this money ever again. I don't want him.
It's very funny.
But he asked me for $80,000.
Oh, okay. Well, it's very funny because in the quote, and maybe Justin can put this quote in there, from Munger said, even if it comes at a cost, you should get rid of the person.
Yeah.
So
now that doesn't mean if you don't want to be my friend, you should ask me for $10,000 and I give it to you and say goodbye. That's not going to happen because now I have the ability to just say, are you fucking stupid? You think I'm going to give you money? Give me a break.
So going into some other things, Occidental Petroleum, this is a funny one. And I pulled out some funny ones and I pulled out some good ones. There was speculation about, this is Buffett, there was speculation about us buying control. We're not going to buy control. We wouldn't know what to do with it. I love when he does that. There was another one. They owned 35% of Apple. He's like, we don't own 35% of Apple. It's amazing how people put these things in their mouths.
Wait, did they say it was 35% of Apple or
35% of the Berkshire portfolio is Apple? Not true.
Yeah, not true at all.
Not true.
By the way, why is it not true? It might be of their actual stock portfolio, but guys, they have 84, 90 businesses they own outright.
Right.
You can't. That's not a part of the stock. It's a ridiculous statement.
This is a good one. This is interesting to get your take on. In the 58 years we've been running Berkshire, I would say there's been a great increase in the number of people doing dumb things. And they do big dumb things.
Okay, so here's my point. This goes back to a later comment that Charlie Munger and Warren actually argued about. Talk about that first, and then I'll go back to this statement.
Well, I just look at this saying, I think that...
Well, say the Charlie versus Warren thing first.
What do you mean the Charlie versus
Remember
Warren?
when Charlie said that he thinks value investing is going to be harder and expect lower returns?
Yes.
So basically the idea is Charlie thinks that value investing is going to be harder as time goes on because more and more people do it. Warren disagrees, which I'm in Warren's boat on this one, which is pretty rare. I actually usually in Charlie's boat. Warren says, no, I don't think so because people are still going to do dumb things. And that goes to this quote. Over the last 58 years, people have done bigger and dumber things. To me, social media has made these markets way crazy high, and I think it's going to make these markets way crazy low. That's what I believe, because when euphoria is high and then social media gets going and the media and the internet, it's going to make things really skyrocket very quickly.
Yeah, I have the quote right here on screen. So during 58 years we've been running Berkshire, I would say there has been a great increase in the number of people doing dumb things. Okay. So it gives you opportunities as other people doing dumb things. During the 58 years we've been running Berkshire, I would say there's been a great increase in the number of people doing dumb things, and they do big dumb things. And the reason they do that to some extent is because they can get money from other people so much easier than when we started. Munger, for his part, was less sanguine on the future of value investors' pursuit to buy great companies at fair prices. I think value investors are going to have a harder time now that there's so many of them competing for a bunch of diminished opportunities. So my advice to value investors is get used to making less. To which Buffett said, Charlie has been telling me the same thing the whole time.
So first off, they can get their money from other people so much easier than when we started. Guys, remember, somebody's going to do very different things with somebody else's money than their own money.
Yes.
That's the big thing you have to remember. There are very few people in this world that are going to do things the same with their or better with somebody else's money than their own. When I talk about real estate deals, I always joke, people say, well, look at these guys, they have 10,000 units. Yeah, it's not their money. So of course they're going to be like, okay, let's throw money at this deal. If it works, great. If it doesn't, well, we still make our fees. They're probably not blatantly saying that, but look at somebody's incentives and I'll show their behavior. Charlie Munger said that. Go ahead, Mo.
Yeah. This is going to the Federal Reserve, people saying cash is trash. Anyone who thinks cash is trash ought to look at the Federal Reserve's balance sheet. It's just astounding the way $100 bills have spread. Believe me, cash is not trash.
Well, then I also heard Warren Buffett said that. He goes, cash is not trash. And it's funny because a few years ago, everybody teased me and said, see, Paul, cash is trash.
Ray Dalio famously said it.
He said it, and I was just like, yeah, he's wrong. Guys, remember, 0%, again, go against Grant Cardone. 0% sometimes is better than 6%. And if you don't understand what I mean by that, 1, subscribe to the channel. 2, here's what I mean. Sometimes getting 6% means a lot of risk to the downside, and 0% is better. That's the thing. Yes, this previous market made my 0% look awful because stocks kept going up. Stocks just kept going up. But if you looked at history, that was a fluke. And I'm okay with that. I didn't cry and complain and say, oh my God, F this. I sat there and said, okay, I made a bet. It didn't work. I'm okay with that. Now I'm getting 5% for my cash, and I'm buying more stocks because stocks are down. The stocks that I like are down 30, 40, 50% from their all-time highs, if not more. Some of the stocks I'm buying are down 60, 70% from their all-time highs. That's what I look for.
Yeah.
Go ahead, Mo.
This is a good one, and he's talking about Elon Musk here, and the bets that Elon takes versus what we like to take is being very simple. He likes taking the impossible job and doing it. Conversely, Warren and I look for the easy job that we can identify. I think that is just brilliant.
Yeah.
Keep it simple, stupid.
You know,
he does a great job. Elon's brilliant. He does a phenomenal job, but it's a tough bet.
Mo and I and our friend Dalton, who's part of our community, who joined us, who helps us with research, we spent a lot of time talking about that recently because somebody we very much respect. We actually disagree a lot with their process now. I believe my calling in investment world is a lot different than I thought it was going to be 2 or 3 years ago. 2 or 3 years ago, if you watch this channel, I was looking for individual small companies with mispricings. Now I'm looking for big companies with a lot of staying power that I can sit there and buy. The fact that I'm even having conversations about a company like Ferrari, which is selling for 50 times earnings, I'm not buying it today. But the price I'm willing to pay today is a lot different than I was willing to pay 2 or 3 years ago. A lot higher than I was willing to pay. Why? Because I see that value in doing very, very simple things. Finding a company, saying, do I think this... My questions, if you watch our video, have come down to 3 questions. 1, do I think this company will be around for the foreseeable future? 2, if the answer to that question is yes, do I think in that long-term horizon they'll make more or less revenue and profit than they are today? If the answer is yes to that, 3, can I pay a reasonable price for the company today that factors in that growth and gives me a good return on my money? If the answer to all 3 of those is yes, then I buy it. But usually the answer to the third question is no, and I have to figure out a price for me. That's the hard part about investing. I'm trying to keep it as simple as possible. You know, that same friend of ours, we were talking about Southwest Airlines a few years ago, said to me, yeah, Paul, but have you considered their airline miles? And I'm like, wait, what? Their credit card miles. I'm like, wait, what? Like Visa? He goes, yeah, their liability for credit. I was like, whoa, like that is, to me, if I'm worried about that, that's not the company for me. And I'm not worried about that.
Especially on a company the size of Southwest.
Yeah. Now, in small companies, $50 million, $100 million market cap, you got to be worried about the nitty gritty details.
Right.
But in somebody, Microsoft, you're telling me that if Microsoft fell to $100 a share, you're going to go read that 10K inside and out. No.
No.
Keep it simple, stupid for me. And I think that's what Warren Buffett and Charlie Munger try to do now because of how much capital they have, which is a lot different than they did 50 years ago when they had a lot less capital. Right?
Yeah. The last one I wanted to bring up was when they were talking about EVs in the car industry and where it's going. And Buffett actually looked back to when the Model T was out and how many dealerships there were, and it was the greatest thing ever. And the changes that have happened since in that world. He's like, I cannot predict, when it comes to EVs, he's like, I'm just out. I can't predict what the car industry as a total is going to look at. There's not going to be one car company that dominates the market and changes it forever. They might have the way that the car moves down the road might be different, but his bet is not going to be on Tesla.
Well, they had BYD.
They did, which surprised me.
They've sold a lot of it. Have they sold all of it or a lot of it?
I have no idea. I haven't looked.
Listen.
But when it comes to betting and saying, they don't know where the car industry is going to be in 5 years. And I think that's a very valid argument. Jim Farley at Ford is like, we want to get to a model where basically Tesla has. Go online, you buy the car, you pick it up when the day comes.
God, people,
no more
I cannot wait for the day.
No more GMs.
I cannot wait for the day there's no negotiating in cars.
Yeah.
I effing hate negotiating. That's what I loved about this market. This market's been so awesome because it's just been, oh, you want to buy a new car? Here's the price. And you just go in and pay it.
Yeah.
It is the most wonderful feeling in the world. I don't have to sit there and bicker and go, it's all about... No, just here's the price.
Yeah.
I'm more willing to support my local dealership when this is the price. But now I got to go to another dealership around and say, listen, you know, hey, I'll come 2 hours and drive there to save $1,000, something like that. Now it's just, okay, my local dealer. To me, when they focus on just the price of the car, to me, the manufacturers are going to say to the people, this is what service matters now because somebody's going to come to you to buy from you because of your service, not somebody else's.
Yep.
That's what's funny to me.
Yep, exactly.
Guys, you got to remember, the airline industry in 1920 to now is astronomically different. The car industry in 1920 and now is astronomically different. Bigger, better, everything. But how many airlines have gone under? How many car companies have gone under?
Tons.
That's what we always say. Look at .com. The start of .com in the late 90s was a huge revolution. How many of those .com companies are still around today? If your thesis is this company is in a great growing industry, therefore I'm going to buy it, you should piss your money down the toilet. You are going to lose a lot of money eventually. Might not be on this, but it'll eventually happen. And you might get lucky. A blind squirrel finds a nut every so often. A stop clock is right twice a day. But eventually, you will end up losing a lot of money. And that's the difference between value investing and speculation. And I do believe that 99.5%, 99.9% of people who have money in the market are more speculating when they buy individual stocks. You've got to evaluate the business based on its cash flows and perceived cash flows. And you don't know what those are going to be, but you can have a range of those cash flows. And they could be very, very wide. And that's what makes investing difficult.
Right.
Because also, the hardest part is when things look the worst, that's the best time to buy. And that's what's hard. That's what makes things very difficult. When things look the worst, that's the best time to buy. All right, guys, again, if you like this, please share this with somebody and subscribe to our channel. We're here. We've done 2,200 videos or so. We're here for the long haul. Thanks a lot, guys. Take care.